All right, let me get back to the markets, please, because that modest rally has all but disappeared. We're still at 17,058 to be precise. We were up 40 or 50. Now we're up 8 points. That's where we are. Come on in. The chief market analyst for the Wealth Empire, Ross Givens. That's not you, is it?
He's here.
No, Ross Givens is over there. Ross, I'm very sorry. A young man just sat on the set, and I wasn't quite sure who he was. It's Friday.
No worries.
Now, you're a big-time... No, not this one. No. Ross Givens, I'm looking right at you right now. Okay. You are a bull. You think that we're going to have a very strong quarter, the quarter that we are now in. So you think this rally continues, correct? Give me your story and tell me why.
Yeah, absolutely. And thanks for having me back on, Stuart. You know, the bears love to come out once the markets collapse and say, oh, yeah, we're bearish. Well, you know, if they've been short and they've stayed out of the market, they've missed this 10% rally back to the upside. But, you know, look, if you look at the market strategists, their average prediction on the market, they recently lowered their year-end target, but it's still around 2171 for the S&P. So, you know, we're hovering right around 2,000 right now. I think that was a very crucial point for us to get above. We closed above 2,000 yesterday. If we run to the average estimate, 2171, you know, we've got probably a 7 or 8% fourth quarter to look forward to, and I think that's going to be really impressive.
Okay, you're not worried about the Federal Reserve raising interest rates? You're not worried about earnings reports? Alcoa wasn't real good. That doesn't bother you at all. You're a bull.
Yeah, absolutely. I mean, the thing about the interest rates is, you know, if Yellen does decide to raise rates, which I don't think she will, I think she's still scared, we're talking about 0.25%. On top of that, this thing's been priced into the market for the last 2 years. You know, earnings are looking strong with a couple of small exceptions, and the market's trading at about 16 times forward earnings. It's not inflated, especially given the interest rate environment. It's ripe time to buy stocks. I think everyone is going to be really regretful if they're not long this fourth quarter. I think we're going to see at least a 5% push in the indexes.
All right, not bad. Ross Givens, thanks very much for joining us. As we were holding that conversation about the fourth quarter and going up, the Dow Industrial has just turned negative, okay? Yeah. Not much. We're down 4 points, but 17,045. That's where we are.